Welcome to The Green Rush, a podcast about the business of cannabis. On a weekly basis, hosts Ann Donahoe and Louis Goldberg talk with the CEOs, politicians, and cultural icons driving the cannabis industry forward. This week, Ann and Louis speak with Tim Seymour, co-host of the CNBC television show Fast Money, which airs every weeknight on that station at 5 p.m. Filmed at the NASDAQ market site, every day Tim, Melissa Lee, and a rotating set of traders debate the day's stock market activities and make calls on which stocks to buy, hold, or sell. Tim's been a contributor to Fast Money since 2006, and like Danny Moses, a past guest here on The Green Rush, is an active investor in cannabis companies. Tim's an all-around good guy and has some unique insights on the legal marijuana industry. And before we get into the show, I'm going to quickly tell you about the biggest industry news stories of the week, because when I'm not voicing the introduction to the Green Rush podcast, I produce a couple of podcasts of my own, one of which, Marijuana Today Daily, gets super nerdy about the news. Don't sit back, lean forward. Now on to our interview with Tim Seymour. Right after I give you a quick rundown on the biggest story of the week in legal marijuana. That pick is a pretty easy one this week, as New York Governor Andrew Cuomo just gave a speech calling for his state to legalize adult use cannabis. New York State has seen a lot of progress made in the realm of more progressive cannabis policy reform over the last year, as it's made some much needed changes to its medical program, adding more qualifying conditions and expanding the ranks of people who can recommend medical marijuana. And just this summer, the State Department of Health released a report that was commissioned by the governor himself, recommending that prohibition be lifted. Our friend Tom Angel over at the excellent news site Marijuana Moment has a great story on this, with lots of background on Governor Cuomo's sudden conversion over to the light side of marijuana policy. Just last year, Governor Cuomo was calling marijuana a gateway drug, but the guy is obviously a smart political player and can read a poll, so here we are now. With a pro-marijuana governor and a state house about to be controlled by Democrats, it's likely that New York State is going to see some major reforms in cannabis law next year. This is going to be a very interesting story to track as New York State's legislature gets back to work next month. That's the biggest story of the week for my money. And now, for real, on to our interview with Tim Seymour.
Tim, thank you so much for joining us. It's not only a real pleasure to talk with you now over the last couple of weeks as we've gotten to know each other. It's been a real pleasure on that front. For those of you who might not be familiar with you, can you tell us a little bit about how you started at CNBC and how you kind of came into being the go-to cannabis guy there?
Sure, and great to be here, Louis. I know you guys are doing some really interesting stuff in the space, and having these kinds of conversations sometimes is actually relative to the format that we have on CNBC. Right? It's fast money, so we can't really sit back and talk about it. And so I always enjoy doing stuff like this with insightful folks and plugged-in folks like yourself. In terms of CNBC, just the quick background for me on also maybe even just how I got on TV, because I think there's some parallels to what's going on in the cannabis world. I'm an emerging markets investor by trade, someone who spent kind of 20 years or so looking at global markets, and that really started when I left a nice safe job on Park Avenue a few years after business school at UBS, and jumped 2 feet into Russian capital markets in 1998 on the eve of what was a historic blow-up that was, the financial historians of the world remember the Thai baht, which kind of fell in 97 and kind of created this round-the-world crisis that ended in Russia in the summer of 1998 and took down long-term capital, brought the New York Fed involved, Bill McDonough. You can make some arguments this sowed the seeds for a lot of the liquidity that was pumped into markets to overcome all this that, led us into kind of dot-com land, which I think sowed the seeds really, frankly, for the economic crisis of 2008. But anyway, let's not get lost there. I think, back to your question, I started doing TV in 2001 because I wanted to better tell the story of a emerging market and a new asset class for a lot of traditional U.S. investors, where I was back in the U.S. Building out the U.S. footprint for effectively a boutique Russian Eastern European investment bank. And I wanted people to know that not only were we not KGB, but that we were actually smart capital markets folks, and that we were quite plugged in and insightful into a lot of global macro that was very relevant for Western investors, U.S. investors, like oil, like commodities prices, like just global macro and rates, and as it related to these growing economies. And of course, from there on, the whole emerging market story, the BRICS, the oil going to $140. These were all things that everybody became obsessed with only a couple of years later. So I tried to position our firm by getting on TV, and I felt like CNBC was one of a couple places that I wanted to be. They were certainly the gold standard, and so I called a PR agency and I said, "Get me on TV, and I'll talk about something that's relevant, and it'll probably most likely be oil. And I'll probably, don't tell anybody. I'll tell them I'm effectively an oil analyst, and we'll talk about it." And so I started doing a lot of TV, and I started doing becoming a go-to guy about emerging markets, because I'd lived and operated and invested in these places, and people needed someone to kind of break it down. So cut to cannabis, and cut to a decade or 15 years later, where when the conversation started to become more than just one of this being an idiosyncratic or a corner of an arcane little corner of the investment world, I felt like it was a topic that the network really should be taking some leadership on. I myself was already quite involved in the sector. I'd been sitting on the board of a friend's company who the guys at Tikkun Olam, who are Israel's largest and kind of first medical producer, when they set out to build out the U.S., one of my old partners from Russia actually went to head up this company and asked me to roll up my sleeves with them. And I didn't really wasn't in a position to do it full scale in 2015, but said, put me on the advisory board, and off we went. And I started doing a lot more cannabis. I started investing in a lot of the public LPs and some of the Canadian plays a few years ago. And so as I started to become both an investor in this asset class and becoming someone that was really looking at it from both the bottom up and a top down basis, it became obvious to me that this is almost the exact same story as the emerging market story for their investors. It was phase one is there's a top down legislative macro event that in some way is going to be really the only investment dynamic you need to know if you're an investor about where there will be interest, there will be rising asset prices, and off we go. And so anyway, that was my view was, and my view is, and I say this all the time. So for those people that have heard me talk, I've probably already bored you with this metaphor and this analogy, but this is a new asset class. This is an emerging market. This is everything I've seen, both in terms of not just the phases of development for the story, for the fundamentals, which is the top down tends to then lead a very bottom up story, but as it relates to capital markets, as it relates to investors, as it relates to the liquidity bubbles and surges, and frankly, what happens with asset prices, what happens with thinly traded stocks, what happens with new IPOs, what happens with when institutions want to get involved, when this goes from being just kind of a top-down asset play where quote unquote dedicated investors are in it, to a place where suddenly this is now a topic where not only will a big institution like a Fidelity care about it, but you'll have their consumer analyst actually rolling up his sleeves doing what he does in every other part of the world, or in very sophisticated, developed parts of their world, that suddenly this has an application for.
It's normalizing it.
It absolutely is, and that's so that's where we are. And as those that may remember some of the first segments we did on the network, they were kind of goofy, right? They were actually ones where we were someone was running bong water sound effects and
It was horrible.
Purple Haze and Cheech and Chong movies. And look, while that was kind of frustrating, because in fact, I thought I was.
Did you feel like you were like screaming into the void to kind of professionalize this? And, because it's really only been the last couple of months where you guys at CNBC have taken it a little bit more seriously, right?
Well, I'd like to believe it's more than that, but I hear what you're saying. And so, yeah, it was, strangely enough, while it was frustrating for me to kind of be feeling like I was in the middle of a circus, it was the best thing for me as an advocate and a thought leader and a big proponent of what's going on, and as an investor and as someone that works with his own clients who want to invest in the space, and as someone who works with a number of companies in the space and helps kind of advise them on my views of the investment climate and the capital markets climate. And so it gave me actually a much it's ironically, this was the best thing they could have done for me, and so I'll take it. Now in the meantime, it shouldn't be any surprise that not just CNBC, but any media outlet that is focused not only on investment trends, but focused on social trends, focused on kind of big consumption trends, focused on all of these different tracks of exposure. CNBC loves this story, and they love it for the right reasons. And I think that's finally where it's coming to. I'm going to say that I think CNBC always, I'd like to believe, is out there trying to find investment themes, translate that back to an audience that is both a big, sophisticated institutional audience and also, a high net worth retail audience or, a mom and pop audience. I mean, it's got a challenge of actually having to appeal to a lot of different type of investor groups, and I'm biased, but I think CNBC does it really well. I think as it relates to cannabis, I think frankly CNBC has evolved as the sector has evolved, and we all know, those of us that are talking now on this blog versus the people that we all talk with every day in the sector, the perception change has been one of the most extraordinary things. You can argue perception equals reality in terms of asset prices, and that the perception change has been more profound than even the move in the asset prices. So when a John Boehner makes a move to join the board of Acreage, or Bill Weld, or all these other folks that people thought to be cut out of a particular posture on a lot of issues that seemed like they were social issues. And by the way, yeah, this is a social issue, but is it really? Because the perception change, follows the mighty dollar, and perception change has really probably been born out of tax dollars, if you ask me. But that's for another part of this conversation. I'm still kind of answering your question about CNBC. By the way, if I was on air right now, there'd be a producer in my ear telling me, "Too windy, Tim. Too windy. Shut up. Answer the question."
Well, we'll jump in with another question. So there's this dichotomy between the U.S. and Canadian companies, that these big, enterprise level Canadian companies all seem to be trading on the U.S. exchanges, like Canopy on the New York Stock Exchange, Kronos on the NASDAQ, and U.S. companies are all regulated to the CSE and the U.S. over-the-counter markets. As someone who speaks to the retail and institutional investors, how are you explaining what's going on, and where should investors get their trustworthy news? Obviously CNBC, but are there other sources that you use that, because I don't know, as a retail investor, how can I have access to these companies trading on the CSE? I don't always have access. So, you're kind of reporting on things that aren't actionable for a large portion of your audience, right?
Yeah. So we're getting into not only, what's my dashboard and what might I suggest to investors, and for how they should also, maybe follow some of these screens or models or whatever. But the first part of your question was really, how do you explain, really what's going on with the Canadian companies trading in the U.S. and meanwhile the U.S. companies, like Curaleaf, who just came to market, is doing
full disclosure, our client.
Okay, yeah, sure. Well, my guess is you all are extremely well versed in just the reality of the regulatory restrictions is really, let's be clear, this is a major part of what is going on here. And so you can be sure that anyone who is a U.S. company who is making the assumption that, and living this every day, we are more compliant than the next guy if we're in the cannabis industry because we have to be. And so there's really, there's a couple folks that maybe have been a little bit more aggressive about risking some kind of a federal backlash. But the reality is that U.S. companies, on a federal level, are really, for now, are going to have a tough time doing the full-blown U.S. listing. And the best thing that can happen is that they list in Canada in as senior of a listing and as liquid and transparent and obviously, fundamentally sound of a listing, well priced. And then, U.S. investors can be investing in Canada in their online accounts, or if they're an institution, it's no big deal. They're indifferent. But that actually a lot of these stocks are trading now in the pink sheets with pretty decent volume. And so pink sheet, historically might have implied something extremely dodgy going on. And I think in the case of a lot of the Toronto listed stocks that then need to trade over the counter here, I think I would caution to say that there aren't any industry at any time, especially in any bubble period, there's garbage that's trading out there. But big companies that have to trade in the pink sheets here are not necessarily something that should be red flags for investors. But how do people get their news? How should they follow the market? I think there's the good news is that there's a handful of really high quality analysts out there that have built sites that are doing real in-depth work. On some level, it's happened faster, and the proliferation of information is greater than I've even seen pop up around emerging markets. And the cool thing about this is there's such a great opportunity for smart entrepreneurial plugged in people in the sector and in the industry who have been involved in the industry for a long time. And there's some opportunistic people that are popping up too, as they would and probably should. But the good news here is that cannabis is not institutionally covered. It's just not. It's not institutionally covered on a traditional Wall Street background. It is on a Bay Street background. So salute to our Canadian friends. But the reality is that there's only a couple houses on Wall Street that have paid much attention or have been willing to publicly be out there. And we know who they are. Cowen's done a great job. Obviously, they're the first firm that should come to mind for anybody. But I think it's a lot of this is then just getting into kind of how people should be evaluating and assessing stocks and companies. And, we can talk more about that. But I think, ultimately what's going on U.S. versus Canada, the good and the bad news is that the Canadian companies, largely came first or listed first or had capital markets access first. And that's created this huge kind of valuation spread between Canada and the rest of the world, and obviously Canada versus U.S. So Canadian LPs are still significantly more expensive than U.S. companies. They just are, and maybe that's good for them because they now have a stock that they can go out and buy other companies with, and arguably do accretive M&A deals because they're going to buy somebody who's cheaper than they are. But it's tough to justify a lot of that.
I just wanted to say, I think you're right. CNBC, of all of the broadcast networks, whether they be like the evening news or MSNBC or Fox Business, none of them have taken the serious look that you guys have. And CNBC has taken the most serious look at cannabis of any broadcast network. And I want to give you a lot of credit for that because you've been the one who's been helping push that forward. But I have another question that kind of relates to this, which is you were recently appointed to the advisory board of the Green Organic Dutchman. And you invest in cannabis companies, and now you cover cannabis companies as a journalist. How do you balance what could be seen as a potential conflict of interest?
Yeah, it's all about disclosure, transparency, and common sense. It's no conflict at all if it's disclosed and people are able to do their own work on the companies and decide whether they believe you or not. If I'm up there as a shrill for a company that I have a relationship with, either as an investor, it's no different than if I own a stock and I'm talking about it. If I own GM and I'm talking about it on TV, there needs to be a disclosure, and then there needs to be, hopefully a sensible approach to that by me, which is, and this common sense, by the way, is all about what do I think is the best way to communicate my interest in a company without sounding like a shrill, and unless someone wants to sound like that. So I'm as a person in the financial media, I'm certainly very, very interested, more interested than anybody, even than CNBC, in my own reputation and how people perceive me, because I've got a business that's outside of that, and therefore it should be obvious if I own a company and if I do advisory work for a company, that I am a believer in what they do in some way. And unfortunately, by the way, investors who are following and just literally, kind of trying to trail after what people say and do, I think they're always going to be a step behind. No one's ever going to know exactly what I did 5 seconds before. Disclosures aren't necessarily telling you.
So they can't front run you, right? That's actually kind of funny because you're always thinking ahead. And on Fast Money, a large part of what you guys do is you pick stocks, right? You just mentioned GM, and I saw you talking about them a couple days ago. And just we're recording this on 11/2. How do you guys go about picking the stocks or what companies you're going to discuss on the show? Because you can't have all those charts generated real time. They have to have been done ahead of time. So do you talk about, we're going to talk about these 5 companies and go into depth, or can you take us into how the sausage is made a little bit?
Yeah, here's sausage 101. First of all, in terms of production and what they can do almost instantly, is I can bring up a name and they can have a chart. So it's not staged. It's totally spontaneous. And by the way, they know what I own and what I don't own, so they can also then quote, underneath or at the end of that block or somewhere, I can say Tim Seymour owns X. But look, the way financial TV goes, at least the one I know, is we're asked to opine on market dynamics, companies, both from a quote unquote analyst perspective, a market participant's perspective. So kind of weaving the whole mosaic of obviously markets trade on market dynamics, stocks trade on market dynamics, and stock fundamentals. So we'll do a call during the day and we'll say, hey, the team will get together and we'll be asked, what do you guys think is important today? And I'll say, I think these 5 things are the most important things to me. And someone else may have 5 different things. Someone may have a couple of the same crossover things. And that's usually what then is blended through at 5 o'clock on Fast Money. And there are days where it's going to be really obvious what we're going to talk about, because when Apple's reporting, like they did yesterday, November 1st, after the bell, it's pretty sure that that's going to be a major topic. And it could either be most of the topic, or it can be at least something that's very important. And so back to cannabis. Look, there's been times, especially in the early parts of this story, that it's been just because it's new, it's hot, and I think it's been a bigger story on a relative basis than it should be. And that's the same thing that happened with crypto. It's the same thing that happened with Russia in 2002. So that shouldn't be a surprise, and I think it's going to find its rightful place in the broader financial media for being, how much it really is.
So I have 2 questions, 2 follow-ups there. When do you get to the CNBC offices? Are you working out of their offices, or you show up like an hour before and that's when the planning meeting is done? Or physically walk us through what your day's like?
Yeah, I am not an employee of CNBC. And again, love CNBC. I've now been there for 15 years, so it's pretty clear it's working for everybody. But I'm managing money by day in my own office, and
fighting crime by night.
of course.
Yeah, little. Oh, can you just say I'm Batman?
No,
Well,
Tim, don't say that.
I'm kidding.
No, I'm definitely not going to say that. In fact, there's some really awful urban legend kind of stuff related to Batman I'm going to stay away from, but because this
Really?
is a family show.
Okay.
But
This is not a family show.
Okay. Well then, Lewis, why don't you really tell us what Batman means to you? So I think the main kind of the way it works is I'm at my office all day. We do a production call in the middle of the day, and markets largely are the same or very different by the end of the day. So stuff we may have talked about at 12:30 may be not
Totally
what we're going to
different.
talk about
Right.
at 5 o'clock. And we can have guests that are going to be on that, unfortunately, and this happens all the time. We can have a company set to come on air, and you got a CEO who's made time out of his busy schedule to be on our show, and then we have to preempt them because there's just stuff that's frankly a lot more important than they are.
We know that all too well.
Yeah, literally, as PR people, it never happened once ever. Oh my God! So can we talk about how cannabis investing for a second? It's such a volatile industry. It is like you said, it's somewhat similar to crypto or to the oil markets or to any unbelievable, any industry that has these ups and downs. Do you use any different tools to analyze investment vehicles than you would for, say, General Motors or any, like more staid industry?
Yes, is the answer. I think based upon the sophistication of the companies, their filings, their balance sheets, their financial history, their cash flow analysis, I think it's a similar toolbox, but it's weighted differently. So I do think that this is very akin to investing in emerging markets. So and what I mean by that is often when I've been investing in emerging markets, in whether it was 2003 in Brazil or whether it was 2001 in Russia or 2012 in Vietnam, you are looking at companies that, especially if they are homegrown local companies, they are smaller. They have management teams that are less experienced. They may or may not have 3 years of IAS or US GAAP financials. They may or may not have any profit. They may be a company that spent a lot of time in a growth phase and have never made any money. Now, by the way, there's a lot of big companies out there in the markets that we talk about every night. Hello Tesla. But I think. I can't believe I said something somewhat derogatory about Tesla.
You know what? Have you ever met Danny Moses? Because if you and he were together, I think you could not have two people who were more like short on this company in the entire world.
Anyway, so here's what I'd say. I'd say when assessing management, when assessing cannabis investments, first and foremost, you have to look at management team, what they say versus what they do. Are they experienced? Have they grown up in the industry? Are they a lateral player from another industry? What is their ability to navigate the regulatory environment and the compliance environment? But most importantly, really, how visionary are they? How competent are they as operators? And then you get into, hey, what's the business model here? What's the subsector within the cannabis sector? Are they a pure cultivator? Are they a retail play? Are they a processing play? Are they a technology play? Are they an ancillary services play? Are they a infrastructure play? Are they This is where, by the way, it's fascinating because you immediately drop into very sophisticated analysis that's no different than looking at any other consumption story or any other company that could actually be growing up in a U.S. marketplace. But what based upon that, what's their business model? What's their profitability kind of context, and how scalable are they? These are all things that are critical to understanding. And obviously, there's just this whole relevancy dynamic that's probably the most interesting one right now, or has been if you look back over the last 18 months of investing in cannabis. I won't give my views on this now. Everybody's got their own views as it relates to what's the most interesting part of the investment horizon in cannabis. But in other words, do I want to be investing in cultivators, asset heavy, asset light, retailers in a 280E regulatory environment where their margins are just awful. And so, I mean, these are the things that investors need to assess, and they need to have their own view of who's tomorrow's trade, and who was yesterday's trade. Cash rich and with a great balance sheet with no plan is no way to invest as an investor into that company. So it may appear like someone's got a great balance sheet, but they really have no clue. We've seen capital eradicated and lost and eviscerated at many other times in the world of financial bubbles and histories, and look no further than Japan to see companies that had, capital was free. There was no price on it. And that led to some really awful decisions. So it's never been more important for investors to assess corporate governance risks in terms of not only the quality and the transparency of management, what they say versus what they do, but then really understanding the dynamics as it relates to their capital structures. Probably one of the biggest ways you've added some value or stayed out of some major pitfalls in cannabis investing in the last years is just understanding what the lockup periods are for companies with company management and restricted stock, for a number of these companies that have gone public. There's a lot of cross ownership structures. Some companies own pieces of other companies. That either means that they have options to buy more, and when those options expire and they don't buy, sometimes that leads to a major sell-off. Sometimes there's capital's raised through convertible bond structures, which often puts tremendous amount of pressure on the equities. So, an $8 billion company with a huge balance, with a huge market cap, doesn't mean that these guys have any cash. So you have to be really careful.
So, which companies do you like? Like here, let's be Fast Money for a second. We know you like T-God, but who else do you like in this space? Who are the ones that you're looking at going, yeah, they're going to be the winners?
Well, I think there's a couple approaches I have to this. There are the guys that I think are doing, the guys and girls that I think are doing very interesting stuff in a pure integrated model. And to me, if I look at the U.S. market, there's obviously there's GTI, there's Acreage, there's Curaleaf. There's the guys that I think have big established businesses that have a leadership advantage, and frankly have really talented people at the helm that I think are going to continue to consolidate. Harvest is about to go public. I think that they too have really built a tremendous business. By the way, without a huge amount of capital raised in their early days to show that they can actually do it and be cash flow positive. So, those are names of companies that I think are undisputedly been successful, and I think are well positioned for success. I think right now the companies that are figuring out where they are going to either have an advantage on their processing, where they're avoiding being asset heavy, where they're partnering with high technology, either in the form of, again, this gets into really traditional stuff where food processing is a incredibly sophisticated, technologically, advanced part of the investment world in traditional commodities and in traditional food stuff. I mean, so those are the companies that I care the most about right now. And I'd rather not name names. You can see my disclosures on CNBC, but it gets back to the same thing. I really, I'm reluctant to be pounding the table on anybody. And frankly, you talk about the guys at the Green Organic Dutchman. The reason why I decided to work with them, and what does that mean? It really means that I act in a capacity where I'm an investor. I can, whether I've been an advisor for a company or whether I've been an owner of a company as an investor over the years, I always like to have a good relationship with management, which says, hey, I think what you're doing here is great. Hey, what you're doing here is not great. Your valuation could be improved if you did X, Y, and Z. My guess is this is what people want to see. So, with someone like T-God, talented guys, I think in a really interesting space, guys that have built a brand, guys that have a CEO who's a veteran of the consumer products world, that's the kind of a story that to me is very interesting to be involved with. That may or may not be, first of all, let's be clear, that stock has been a pig for the last 2 months, especially the last month. And a lot of that is due to some of the technical things I just talked about with where the shares are locked up, when there's some cross ownership stuff, where there's strategic stuff going on, not necessarily an indictment on the company. Some of this is really just liquidity dynamics. But I think investors need to evaluate all of this stuff. And I think that's never been more important.
So I want to take a pivot to off the stock market for a second and talk. We haven't asked this question in a while, but you're the dad of 2 kids. And as someone who invests in this industry and you're attending all these conferences, are you having active discussions with I don't know how old they are either, but, or if it's appropriate, but are you having any discussions with your kids about cannabis, and how are you kind of telling them what dad does?
Right. No, we're not talking about it. Not because I'm not. My kids are 10 and 5, and I'm not talking to them about the Coors Light that I'm drinking at night, at the dinner table either.
Are you thinking about how you will when your 10-year-old turns to be 13, 14,
yes.
15? Yeah.
Yes, of course. And I fortunately feel that. The harder conversation is with my parents than it is with my kids. And even though my folks are very hip, I'm one of 5. Anyway, it's a great question because it gets right to the social dynamics of what's going on out there in our country and people's understanding of really not only, my big argument would be anyway that look, cannabis is the recreational story is such a small part of it for me. It's such a small part of where I think the investment opportunities are, and therefore, at first that was certainly something I thought about, and it was a lot more of an issue 2 years ago when I think public perception was at a certain place. Look, I'm someone who's in the middle of the media. Back to CNBC, when I said I wanted to start talking about it, I went to him first and said, what do you think about this? So back to the family.
And was their reaction? So where can you score for me?
No, I think they knew where to go. Yeah,
TV guys, the TV producers definitely.
All producers know where to go.
So
come on. I'm the
so
last
we want to be respectful of your time, so we have one last question for you. It's a segment that we call While You Were Sleeping. What's the one thing that you think that either the public isn't getting or guys like you in the media are missing when it comes to cannabis? Like, what's the one story you wish that was being done on CNBC or that you were reading in the journal?
Well, I think that story has to be who are the forces at work that have kept cannabis illegal, and the legislative track, and why and I'm speaking of the drug companies. I'm speaking of the private incarceration sector. I'm talking about the people. I mean, the most important story is probably outside of the economics is probably the social dynamics here. And what we're not getting enough information on is really, big pharma versus cannabis, and all of the other people whose interests are best protected by keeping cannabis, from being descheduled or federally, accessible. I just think that it's extraordinary to think about, and here's the cool thing about this. I consider myself, look, I live in New York City, which by definition means that you have to be not only socially tolerant, but probably pretty aware, and at the risk of sounding like one of these East or West Coast, kind of elite guys, because I don't feel like we feel like that at all. But my point is that I always thought of myself as someone that was pretty socially aware of all of the dynamics out there in terms of demographics and whatnot. The reality is that what people are learning, and what even I feel like I've learned more in the last 15 months and appreciated more in the last 15 months as I've been involved in the sector, are the social consequences that have been inflicted upon our country and the world from cannabis being illegal. And I just, I never thought of myself as a tree hugger or a Greenpeace guy, and, I've been to 100 Grateful Dead shows, but I didn't walk around.
How many post Jerry?
Not many, maybe 20, maybe 20.
Have you seen them with John Mayer?
Yeah, I have. And he's unbelievable. He's a breath of fresh air. So,
oh my God, it's so much better, isn't it?
Yeah. Well, hold on a second.
No, I mean, so much. No, not better than with Jerry, but better than they were when after Jerry. I mean, there was the last 5 or 6 years. It was not as much fun as it used to be, and he's added like this unbelievable burst of youthful vigor.
This is a perfect example of like John Mayer's just a great player, and in fact, if anything, the things I've heard about him personally, probably, are not terribly redeeming, but he's a great guitar player, and the music is insane. So it's exactly kind of the whole thing. Like I grew up in Westchester, and I had my friends that were just hardcore Deadheads, and all they did was listen to the Dead, and you couldn't listen to the Who or Led Zeppelin or the Police or the Cars or whoever. You had to only listen to the Dead. And, that to me is just ridiculous. Even though I love the music, I think as much as they did. So, I think that's, kind of what's going on in the sector right now. I think there are people that have grown up in it, are, major users, total practitioners. And I think then there are people that are somewhere in between. And then I think there are people that just appreciate the opportunity and this transformational, generational, pick your hyperbole, but it's all happening. And the cool thing about this is, again, it gets back to the applications for the plant and where it's all going. I mean, I think the biggest opportunities for cannabis are really nutraceutical, wellness, biopharma, et cetera. So I think the recreational market, it's fascinating. Consumption trends are fascinating. They are changing. I think we have no idea where they're going to go. But that's my long-winded way of kind of pointing out where I think where I've been with by the way, you want to where do I fit in? I've been largely estranged from the plant since high school, but I'm certainly well acquainted with it from the nutraceutical CBD dynamic, and to be fully honest with you, as a bit of a control freak, one of my biggest problems with cannabis when I smoked in high school was that I felt totally out of control, and I think the biovariability dynamics are changing so dramatically for the entire spectrum of people that use it, or their ability to control or dosage or dissemination or all of that is why you're going to have this. I don't know what the number is. We don't know what the number is, but of the first-time users or the people that are getting back in touch with it, and their experience is going to be totally different because, frankly, it's going to be totally different. And I think this is where, again, the very interesting consumption trends skewed more towards the mass market are the most interesting.
Okay, you have to go. You have to actually go make the sausage. So go make the sausage.
All right.
Thank you so much, Tim.
Thank you.
We really appreciate it. Our thanks to Tim Seymour. You can catch him almost every day, if not every day, on CNBC, usually appears on Fast Money, or check out his company at SeymourAM.com. That's Seymour, SEYMOUR, AM.com to chat with us. Oh, as always, you can find us on Instagram and Twitter with the handle at KCSA_cannabis. Drop us an email at greenrush@KCSA. Lewis loves hate mail. And don't forget to subscribe to the Green Rush in your favorite podcatcher. One take, Shea. One take.